All right, crazy day. Get back here just to see what we ended up selling a bunch of stuff. It looked like we add up some of these things here. It looks like LAMR, CB, AXP, CHY, CHY again. Obviously different accounts. DOX and DGX. Taking profit. Just continue to drain the market. That's what your job is to do. Nothing else. Not to look at charts and guess which direction it's going. That's wasted time. No longs today, surprisingly enough. But let's see. We got a few that are still doing their own thing up against what the market's doing. But yeah, I guess they were talking about capital gains taxes coming in. Whether or not it comes in or not, I don't care. It makes no difference to me. If I have to pay more taxes, I have to pay more taxes. I hate it, but you know, there's always ways around paying too much tax. But if you're making money in the market, you know, do your share, pay your share of taxes. If you own your own business, corporation, you've got plenty of write-offs. Remember, if you've got it doesn't affect you, whatever the or personal capital gains tax is, because if you're in a qualified plan, as it stands right now, you don't pay any taxes on your gains, so it's smart to make as much money as you can in those. You know, capital gains doesn't apply to your trades, short-term, long-term, or dividends. That sucker just keeps on growing. Now, of course, if you have a cash account, yeah, I mean, if you've done well, then pay your share and move on. You know, doesn't matter. If you're going to make money in the market, hey, it's too easy to make money in the market. A lot of people, though, they want to try to make that million, not make it consistently. That's where they get into trouble. So let's go down through here. Look at, I guess we need to update our profit chart here. So today this change, that was in the morning, 1303. Total trading is 59.51. So we're up to the 1122, which brings us up to about 74.84 per day. Remember, this is a combination of, or a culmination, cumulative number here off of 3 accounts, right? So you can break it down however you want. If you want to divide by 3, that's fine. That's what you'd be making a day. Just a ballpark, you know, because they're all different numbers. Once you start getting up over that 100,000 mark in your account, whether it be you know, a cash account or a qualified plan, you'll start to see those gains snowball. Once it starts snowballing, then, like I say, if you can't manage this money right now in a $20,000, $30,000, $50,000, you know, $80,000 account, you're going to have real trouble at the high end, because your losses are going to become magnified, just like your winnings would. So if you don't take any losses, the winnings just keep magnifying themselves. This ball keeps growing bigger and bigger. Your trades become bigger and bigger. So like if you're going 100 shares on anything with under 100,000 shares, it's not for me to say, but you know, it's not good risk management. We use a little different approach to it. That's why we don't take losses. And I could care less if this market comes down. It's not going to affect us. You know, we got plenty of cash sitting on the sidelines waiting to buy up more. We're just waiting on the occurrences. We're waiting for our scans to tell us, you know, hey, this is a good time, get in. It's all proprietary information, so I mean, you can try to figure it out if you like. But we offer scans, you know, once a week. That's how long they're good for. It's just a good way to stay engaged with the market, keep your head in the game. Also, if you don't have, if you're just sitting there on the sidelines waiting for, I don't know, some signal from the skies or whatever to get involved, you're missing dividends every second. You know, there's a lot of hype going on right now. Excuse me, I got dogs being stupid over here. Hey, don't do that. No. Tear that up. You'll never hear the end of it. All right, so yeah, we want to concentrate on growing this particular number. Your bottom line, any business, your bottom line is, are you making money? So like, I mean, if you're making money in the past, maybe this isn't for you. Maybe you're, want to take more risk. That's up to you. This is we've tried to remove as much risk from the market as possible in our trading, and this works well. We don't take any losses. Well, we haven't taken a loss for, what is it, 321 days now. So I don't even remember what the date was. We just keep rolling that forward. But we show everything. If it's something that's interests you, or you're having trouble, just ask some questions. We're not here to tell you what to do. We're here to teach in a way, but just show you what's actually happening, and how a lot of pros manage their money. Some do, some don't. Some are just risk takers, They're just like, well, hey, if it does this, I'm done with that. All right, sorry about that. That stopped the dog from tearing up a couch or something. So where were we at? Oh yeah, looking at a few of these. Let's look at RHI. I don't know if this is on this account or not. Yeah, you can see we thought there was, I asked the question, was there a fake ad up here? I see we kind of caught it at the top there. We're probably just one order sitting up there. But I don't know. I don't look at time and sales. I don't look at volume. I don't look at any of that stuff. Right? We just have it predetermined. See, we bought it there at 82.88 and we sold it there at 86.97. It's a simple process. Let's see, GPC. Let's see what this one is on. Oh, wrong account. Let's go back over to this one, GPC. There it is there. We took a profit there. Yeah. So we bought that somewhere in the past because the blue's not on the screen, but if we look, we can't really see it, I'm sure. This is all the trades over a 7-day period. So this goes back to Friday. And then 19th is Monday. So just continuing on forward, you can see the blues are just constant profit. Of course, you have to buy something to be able to sell it, or at least you have to own something to be able to sell it. If you're not selling it, it's unrealized. So I try to, there's nothing wrong with holding stuff, if you've got some idea that the world's coming to an end, and maybe you have some physical gold or something, that's fine. I mean, that's up to you. It's your decision. But it's not going to, if it's physical, commodity, and you're not selling it, you're not profiting anything from it. It never turns into a gain until you sell it to somebody else. I mean, a lot of people, that FOMO, fear of missing out. If you don't sell, you got FOMO. You're worried about not being able to buy either more of it, or you think that it's going to the moon, and that's fine. If you're collecting dividends on it and you've got, say, $3-4 million, let's just say $1 million in the bank, and you're earning 4%, that's 40 grand a year. So I can't tell you you're wrong for doing that. You're actually making money. But there are better ways to do it. especially with smaller accounts. But if you follow the rules and stay mechanical, yeah, you can definitely enjoy some positive gains. We've been in a good bull market for years, and you know, we don't know where it's going to stop. It could stop today and go on down. But if you use the same rules, and you don't freak out when the market goes down, you watch your unrealized losses start to mount. Like if this goes down half, right, this will be negative 19,000 in the account. But the thing that holds true is the dividends, like these will increase, right? The dividend yield will increase as the price goes down, because all of these would be dropping. You know, we don't know. Some of them may stay up. But that said, if this gets down to negative 19,000, this could be like 12%, 13% return on your money. But you got to understand, you're still only making the dividend amount. The dividend amount, if it goes down, yeah, then you know you can subtract the dividend yield would go down. But a lot of people don't understand this, and this is where they get trapped at the top, because they think, oh, you know, I got all this money in there, and I got 31,000. If I wanted to cash this account out right now, right, I would take a $4,547 loss. That just means, hey, I want to cash all of these at right as it stands right now. You just, you know, minus your commissions as well. So if you got, you know, 200 positions, that's $200 with Interactive Broker. There it goes. Bye. That's what happens when people get scared, right? So they're willing to take that. They've been taught that it's better to take that $4,500 loss than it is to sit on it. And I would agree that if you own growth stocks, yeah, the chances of you making any money off a growth stock once it goes down is nil, because there is no dividends being paid. So if you like the companies that have been around for a while, such as AbbVie, and I don't know half of these companies, all I know is they're paying dividends. A lot of these are like REITs, REITs, real estate deals. And then you have CEFs. So it's important to understand this. You know, when the market does finally come down, if you have a boatload of stocks that are paying you dividends, right? There's no reason to freak out, because you're going to buy stuff on sale. I'm just going down through here looking at a few. So you can see here, let's just look at this chart. So CB, right, 313, CHY, 15. And it varies from stock to stock, right, because it's a percentage. Stocks, EEF, and here's a whole bunch for today. Well, this is today's 659, 249. Let's go over this other count. We can get it up. And you can see there's the others. All right, so you got RHI, LAMR, that's some sign company. American Express, this is a CEF. Docs, I have no idea. DocuSign, maybe? I have no idea what it is. Doesn't matter, it pays the dividend. It came up on the scan. We use our rules. We're in and out. And this was one that was bought on the scan. So we've had one more day. You can see it was bought maybe Monday or something. You can see it's just a little to the little offset from the red. But if you look at it, we can see it. Let's see. So docs right there. We come up, and where's it at? There it is right there. So we bought it on the 19th, which would be what, Monday? We bought it in the morning, so we made 1.9% in 4 days. Right? About a 0.25% per day on our money. Where are you making that kind of money? Not in your bank, that's for sure. But yeah, not a heck of a lot going on this afternoon. Whatever brought everything down was probably, I don't know if the government or who said it, but you know, they're going to talk about increasing the capital gains. That doesn't worry me a bit. Like, come on, if you want to bring the market down, my cost basis doesn't change, right? The unrealized profit and loss will change. So the market's going down and these are going down. Yeah, that's going to increase. But unless you sell it, you don't realize the loss. And vice versa, if you don't sell it, you don't realize the gain. But a lot of people get this attachment, you know, whether it be a stock, physical things, they just, oh, I can't let it go. And it's like they don't want to turn it into a monetary value because they think if it holds the wealth, that somebody's going to pay them what they're asking for it down the road. I mean, if we get into some real bad situation, it doesn't matter. You know, nobody's going to give you a piece of bread for a chunk of gold. They just don't care. You know, they want to live. They want to survive. You can't eat gold. You know, but the monetary system, if it gets that bad, we're all in the same boat. And, yeah, gold might get you a sandwich. I don't know. I don't even like to think in those terms. But yeah, everything's down this afternoon. So yeah, but we came out positive on the day. Just another good day in the market. You know, we'll get ready for tomorrow. Getting ready for tomorrow is I get off the computer, I go walk the dogs, I go ride my bike. You know, I don't have to worry. Let me see if I can extend this a little bit. I always like playing with Excel stuff. It's easy. I just make it, let's move it over to the side a little bit. There you go. So that's what it looks like. Sit down. Sit down. Dogs are ready to go. You got about 10 minutes, guys, and we'll go. They know what time it is. And what else we got going? Yeah. Well, another couple, well, I think 3.5 weeks, I guess I should have that ebook ready. Something like that. I'll put that up for sale on either Amazon or one other venue with another vendor, and I'll provide a link to it. I don't have any website. I don't need a website. Just go through Amazon. If you're interested in it, it'll be coming out. I'll throw it, like I say, I'll throw the links up. It's just a basic, you know, strategy, and you probably have never seen anything like this before, what I'm putting out there. And I know there's not a lot of people watching this, but if you come across this, you better pay attention to what I'm showing you, because it's going to be interesting if this market actually breaks to the bottom, because I can show you exactly what happens. There won't be a lot of buying going on, I can tell you that. Well, in the first couple weeks, maybe. But after that, no. I mean, it just depends how far down the market actually comes. But you're getting a sense there that these 20-year bonds are starting to move. You know, market's been going up, right? And then is this an indicator of some kind? I don't know. I don't trust charts, you know, because it doesn't mean anything to me. It just means the price was higher than it was yesterday or last week. That's all I can take from this. I don't look at the green bars, the red bars. You can make these purple bars if you want. It doesn't matter to me. The price is the price. So yeah, not too bad. 30. Yep. I like to double check everything. But yeah, if you're struggling with charts, my advice to you is stop using indicators and start using math. Math will help you a lot more than any of these indicators will, like the moving averages, throwing this line on here. If it crosses that line, and you just take an arbitrary line and stick it on the chart, right? Here's something somebody told me. This was interesting. Years ago when I first started trading, you can call him a mentor or what, he said, okay, go from the left part of the chart to this part of the chart, and then go from this part of the chart to this part of the chart. And he says, if it's in this V, you buy. If it's over on either one of these sides, you don't do anything, right? And if it's here, you sell. Now, I know that sounds backwards, but it was very interesting. Oh, all right, I'm sorry, did I do that backwards? Oh yeah, so sell here and buy here. Just craziness. He says it makes, if you try that, you've got a 50-50 just like everybody else. But if you don't manage your money, you have no idea. You don't know what you're taking to profit. Make up whatever you want. You want to say, hey, if it's sunny out today, I buy this. I mean, I'm just throwing stuff out there. It makes no difference when you buy it. It's how you manage the money. But if you're buying, the rules of the game is you don't lose money. The second rule is, look at rule number 1. And then you only want to be buying dividend-paying stocks. You get trapped with these so-called growth stocks. What's the opposite of growth? Deterioration, right? So when it's going down, it's deteriorating your portfolio. When all these stocks are going down, I'm still getting paid dividends, right? And it could stay down for years. But if my overall account, let's look at this one, if it's 7.75, let's say it stays down for 10 years, what's happened to my account? It's doubled in value. People need to understand how this works. I'm not talking buying and selling. I'm just saying sitting. That money will double, right? Whatever you've got invested, that's 67.7. Now, of course, this value can change, right? But we're saying if the dividends stay the same for 10 years and you have this much invested at this rate at 7.75, right? Then you're going to double your money. Now, of course, dividends can go down. Let's say it takes you 11 years. But what usually happens is we have what's called cycles. Things go up and down. But if we have like a downward slide for years, right? But markets have a tendency to crash. They don't melt up like we've done. It's going to come down hard. It's going to come down fast. And then, big corporations, or investors, they're into making money too, right? So what are they doing? They're buying when they think it's low. So the whole time is you're collecting those dividends. Let's say we're down 2 years. So you only make, what did I say, 9 or 7.75%. You're just sitting on the sidelines waiting. All that money's going into your cash account. Now, if you're trying to live off of it, that's different, right? And you better have some money. But if you're working 2 years from now, if you had 15% extra of that would be in your account, right? 7.7 and 7.7 is 15.5. So you'd have 15.5. 67, 792 multiplied by 15%. So you'd have an extra $10,000 in there. I mean, see, people want to get rich quick. Especially somebody that's got like $1,000 to invest. They think they can turn that $1,000 into $1 million because there's people out there that want that $1,000 from you, right? So they're going to tell you how to do it. If you stick with companies that are paying dividends, you can't get hurt, especially if you look at the size of your account and disperse it equally about, let's just pick 1,000 stocks or 100 stocks, whatever, and take an average of how much money you would put in. So that'd be like $670 with this size account, right? That's be the most that you could invest. That's a hell of a lot smarter plan than going, okay, I'm just going to take that 67,000 and buy BTZ at 6.8%. Well, if it goes down, sure, you're getting your dividends, right? But what are you going to do in the meantime? You're not going to do anything. You're going to either have to, you could take those dividends, and if it continues to fall, you can buy more. You'd have more shares. You're waiting for it to go up. But let's just say, on the chance that this stock never recovers, and it just continues on down, right? Well, let's just say they stop paying dividends. What are you going to do at that point? Now you're stuck with your 67,000 in there, not doing anything. The only chance you've got is to hold it. If you say, hey, I'm going to take a loss on it, how long is it going to take you? Like if you're down 50%, it's 34 grand that you just lost. How are you going to recover? I mean, if you got a lot of money, you can do it, right? But if that's all you've got in the market, it's a hard road. So spread your money out. Do it based on the size of your account. If you need help with understanding what we do, just ask some questions. It's pretty easy to follow. You can follow the trades. You can do what I do, or you can do your own thing. Learn from it, though. Figure out what we're doing. The money management is the key. I can't stress that enough. That's a good down move for the day. I like that. Hopefully tomorrow we've got a bunch of buying, but you never know. We might close that on a Friday. Last couple of Fridays we've done pretty well. Going into the weekend, but I bet to look at Bitcoin here. What's this one? Oh, it's BCH, Bitcoin Cash. But we took a little profit on Ethereum this morning. I've been involved in cryptos before they were even heard of, or before it hit mainstream. Now let's see if I can get that picture. Find that picture. Yeah. I don't know if you can see that. There you go. It's still, well, it's better if it's small, but you can see we bought it at $22.95 and we sold it at $25.25. Now this is an example. You have some extra cash, right? All the money I've made in cryptos, I continue to trade it. Reason being is it's money I can lose, but I got into it years ago, and I'm a believer in it. I don't know where it's going to stop. It could continue on for forever now, and it's got a small market cap. What's the Bitcoin's at just under $1 trillion. It's been losing some money here today, but I'm a buyer on the way down to a point. I think this is probably, we might get a $20,000 or $30,000 retracement in price. Doesn't matter. If it works the same way as the trading has gone, those windows that it stays down are going to close tighter and tighter, and you're going to see such volatility with Bitcoin and all these other coins that if you're not involved in it, man, you're missing out. And you can buy fractions of it. I buy one of Ethereum, one of Litecoin, one of Bitcoin, and for or Bitcoin Cash. Bitcoin, I only do a fraction of it, but I have a lot more than just that sitting around. So I don't invest it all. You know, I take a small portion of it. I protect my capital. But you know, if you can make $200, $300, $400 a week on it, I mean, why wouldn't you just play with it? It's pretty simple. But you can't be swinging for the fences. Just target a number: 5%, 10%, 15% gain on your money. Watch and see what happens. Find that sweet spot. Yep, well, that's it for today. Hopefully you guys will be around, and we'll start again over in the morning. Friday's the last day for this week, and let's see if we can. What do we need to do to beat last month? Always looking to beat it. So we were at 65.50 per day last month. We're at 74.80, so we're still about $9 per day ahead of yesterday. And this is what I talk about on the snowball effect. Now, if we, like I say, if we get a market crash, you know, these numbers, all you're going to see is dividends. And we're okay with that. Because why? We're not losing money. But anyways, in the morning.